Good morning. How are you today? Are you ready to learn new chapter today? Today we learn chapter 2, Basic Accounting Concepts.
On this chapter, students are able to learn 2.1 Generally Accepted Accounting Principles, 2.2 Accounting Concepts, 2.3 Accounting Equation, we are learn at tutorial, 2.4 Double Entry System, we are learn at tutorial.
Do you know about GAAP? Financial accounting practices governed by Generally Accepted Accounting Principles, GAAP. The principles can change over time to reflect changes in the business environment and demands of the users. The different opinions between the accountants can be solved by referring to GAAP. The principles govern conventions, concepts, regulations, procedures and the guidelines of the standards. GAAP's objective is to make information in the financial statements relevant to the users, reliable for the users, and comparable in differentiating entities. All financial statements comply to GAAP. The importance of GAAP are standards that are generally accepted and universally practiced. These standards indicate how to report economic events. In this chapter, I'm emphasize accounting assumption, accounting principles and accounting constraints. It is through this emphasis on the why of accounting as well as the how that you will gain and understand of the full significance of accounting. The accounting assumption consists of 1. Economic entity. 2. Monetary measurement. 3. Accounting period. 4. Going concern. The accounting principles are historical cost, objectivity, full disclosure, consistency, revenue recognition, expense recognition, matching principle. The accounting constraints are materiality, fair value measurement. The individual business unit is the economy entity for which economic data are needed. The economy entity must be first identified, so that the accountant can determine which economic data should be analyzed, recorded, and summarized in reports. So, what economic entity? Economic entity is about the activities of an entity should be kept separated and distinct from other economic entities such as the owner of the entity, suppliers, and customers. Different entities need to be evaluated separately. Owner and business are two separate entities. The transaction of business entity should be accounted for in business's books of records. The example of economic entity. The owner of a business bought a car for his wife's personal use by using money from the business operations. He recorded the purchase as asset in his business book. It is correct or not? Solution. The business does not follow the economic entity concept. The purchase of the car should be recorded in the business as drawings because the transaction was related to the owner and not to the business. The owner is considered as a separate entity from the business. Monetary measurement means we should report all the business transactions or events in monetary measurement. Money is the common denominator in business. Transactions and events are recorded in monetary units. Assumes a stable monetary unit. Examples of monetary units are the ringgit in Malaysia and the dollar in the United States. Accounting period means we can be divided into specific periods such as months, quarters and years. Reporting period covered by financial statements. also known as financial year.
From situation below, answer the question. Example. A company was formed on January 1, 2019. It closes its accounts on 31st of December. Every year. Explain the concept involved. Conclusion. It follows the time period concept. It is a normal practice for financial statements to be prepared annually by a business. The preparation of companies' financial reports should consider assumption that the enterprise or business will continue in operation long enough to carry out its existing objectives instead of being closed or sold. The business is assumed to remain in operation for the foreseeable future. Most firm mass resources such as supplies, land, buildings, and equipment are required to be used by the business in its normal operations, not to be sold. It is reasonable to use historical cost for a going concern entity unless evidences suggest the business will be liquidated. Example for going concern. The manager of Hotel Czar assumed that the hotel might be out of business at any time, based on the current bad economy condition. He suggested Hotel Czar reported its assets at the value different from their original costs. The values are estimated at their values in the second-hand market. Does the manager do the right thing? Solution. The suggestion should be rejected because it is not consistent with the going concern concept. The assets must be at their original costs because the business is assumed to be operated for an indefinite life.
For each of the following case, discuss the accounting principles involved. 1. The owner of Cyberzone paid his home electricity bills using the business money and recorded it in the utility account of his business. 2. A company was formed on the 1st of July 2019. It closes its accounts on the 30th of June every year.
At the end of this lesson study are able to describe about GAAP and describe the accounting assumptions that is economic entity, monetary measurement accounting period, and going concern. All students are required to read for accounting principles for the next lesson. Thank you.